Here with more insight is George Friedlander. He's Citigroup's head of municipal strategy.
Good morning.
Good morning to you. So a bit of a surprise with this tax compromise we saw out of Washington, and that is the Build America bond program, which was very popular, was not addressed in this compromise. Will it continue in 2011, or are we about to see it expire?
All we can do is guess at this point. The negotiations are still going on, but there's a pretty good chance, we think, unfortunately, for state and local governments, we think there's a pretty good chance that it will expire, that it won't be part of the deal.
Yeah, I was looking at some of your research earlier. You say Build America bonds made up about 26% year-to-date of municipal issuance through the month of November. And Build America bonds are a type of municipal debt, but it's subsidized. It was part of the stimulus program. So what happens to, I mean, does the demand fall off? What happens to supply?
Well, the main effect it's going to have is not on Build America bonds, it's on tax exempts.
Right.
And that's already happening.
But Build America bonds were taxable, but it was just
right, yeah, but they were a substitute for tax exempt bonds,
right,
for issuers. And the market was surprised that it was left out of the deal so far. The final deal is still being worked on. There's a chance we'll get them back, but not a great chance.
Not a great chance.
So there will be more tax-exempt supply, and that has already affected the tax-exempt market quite a bit.
If we do see an extension, do you think that subsidy amount will change? Will they be more or less attractive?
For issuers, it'll be a little less attractive. It'll be down to 32%, we think, if it gets done. But again, it's a big if at this point. Big if at this point, yeah.
So, I mean, looking at chasing yield, as you say right now, what do you expect, and what would you advise clients going into 2011? What is the safe bet if there's so much uncertainty?
Well, we had put out a buy on munis back in the middle of November. And then yields dropped right on schedule. And then with Treasury yields back up and this surprise on Build America bonds, yields are right back where they were in the middle of November. And we're encouraging investors in tax exempts to buy now.
To buy the one you still can, and buy into the tax exempt market.
Yeah, buy into the tax exempts in particular, because even though the BABs may go away, I think the main factor right now is that supply is going to plummet the first quarter of next year. And
yet we talk about, day to day, the fiscal problems at the state and the municipal level. So why won't there be more demand from the issuers? Why won't they be going to the market?
Interesting question. Supply in the tax-exempt market is not that closely related to the budgets. Really? In fact, supply tends to go lower when state and local governments are having difficulties balancing their budgets because they put off projects that they otherwise would have done.
They just put off having to raise money. Even though they need money, they put off the raising of it.
They put off the raising of long-term money because long-term money isn't what they use to balance their budgets anyway. So projects, water, sewer, transportation, schools, a lot of that financing doesn't get done when budgets are very, very tight.
So it isn't as clear of a play off the Main Street headlines right now to go into this area of the market. More broadly, though, when you look at what's happening in fixed income and you look at government treasuries right now, what do you think about this debate, whether deficits are really, truly starting to matter and the bond vigilantes are back?
I don't think this is bond vigilantes. I think what has happened the last week with higher yields or the last few days really, is a very natural reaction to what happened in the tax deal. The tax deal is stimulative, and it'll also mean a lot more borrowing by the federal government. And there's been a one-time adjustment to a surprisingly aggressive tax deal. So I think so. It's not really vigilantes. It's just a one-time structural change in the yields of the Treasury market.
All right. You said short-term repricing. We'll see. Thank you very much for coming on.